The following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Love yeah, it. Definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Right now, you get the Dow down 9. NASDAQ is flat. You get the S&Ps off 2. Gold is up $1.60 at 1,644. We get silver up 2 cents at 29.53. Platinum got some juice underneath of up $17 at 15.24. We get light sweet crude flat. Bonds up 26 ticks at 137.03, and King Dollar down 3 ticks at 81.89. The Euro's up 6. And, you know, you can see we got a nice little volatility out here this morning.
Oh, we do.
You know, we got over all the highs yesterday, folks, with lighter volume, and rejected them. And now this morning we have the battle. The battle is on here this morning.
You rejected them, and for me, for my work here,
yes.
You know, what's great is the way that you talk about the market talking, walking, and squawking.
Yes.
What I always love is when it gives us these candle confirmations.
Okay.
And so we had bearish engulfing candles.
Yeah.
Occur in the SMINI, in the SPY, in the S&P 500, the SPX.
Okay.
You had it.
Yeah, right.
Okay.
Yeah.
And that is, and what's so great about that is when you're up against a resistance area, and that is really communicating to you what's going on between the bulls and the bears. And
right.
All we need today is just simply a lower close. Get a lower close. It gives you some nice price confirmation as well.
Yes.
And that would be a beautiful thing.
No doubt.
It's great because it's something for everybody. It's for the bulls and the bears. It really tells you where that line has been drawn in the sand out there. It's beautiful. I mean, this is, some days when you're in between spots, you're not sure which way the market's going to go.
Well, what happens in between spots, and that's where the problem lies, is that in between spots, folks, whether you're a bull or a bear, your risk is way too much.
That's right.
This up at these levels right here. It's like, okay, what's your risk? Your risk is minimal. It's less than minimal.
That's right.
Because the bottom line is that, hey, it either goes or it doesn't. And yesterday it proved that, hey, you bulls, get out there and do it, man. Get it going. 877-927-6648. Now, let's go over to the dollar, because what we have out here, what I'm digging right now, folks, is this. So watch what ends up happening. When you get a failure like that yesterday, number one, that's saying, okay, now the brawl is on.
Yes,
okay?
No question.
The volatility this morning is, to me, the identification at the same time, because that's exactly what happens.
Yes.
It's got to go both ways very quickly, okay? Because it's like, okay, which way is it going to fall? Now, the dollar says it all. Like this morning when the dollar was up,
yes.
I wasn't digging it, actually.
Yes, okay.
And the reason being, folks, was this, is that everything is in harmony, that it wants lower price. You had all the indices go over the high, close underneath them. We know no one's in the store. We had bonds reject the low with lighter volume.
Yes.
Okay. We had the gold stocks all pull back off the highs.
Stocks did.
Yes.
Stocks did. The actual contracts.
The contract
underlying,
did.
yeah.
Right.
Yeah.
That will.
Yeah.
But bottom line is that they didn't have volume.
For sure.
But they pull up. But what we didn't have, and this morning when that dollar was up, I wanted to see a lower low on this dollar.
Okay.
The reason being, folks, is that what happens is this, is that we had lighter volume.
You're getting your wish, baby.
Yeah, no, exactly. We had lighter volume than it was going into, folks, okay? We had 27,000 contracts, but what I've seen is that even when you have an extension of volume,
yes,
compared to what you've had going into another one, what markets like to do is like to get underneath it, lighter volume, then go up, and then what you get is that wide price spread accelerated volume.
Okay.
So this morning I'm saying to myself, man, okay. So now we get a shot at it. You had a high of 82.13 this morning. We're at 81.91. It only has to get down another, 10 ticks. Get underneath that baby, reject it once again, and then to me, then it would have some action here, you know.
Yeah,
so.
and for me, that it was in the currency market where there was the disconnect yesterday.
Yeah.
You know. I mean,
yes.
You know, and so what's great when as I took a look at it, as I sat back last night, started working on my newsletter, putting my thoughts together.
Right.
There was such clarity.
Yes.
You know, such clarity with regard to all of the markets, as you say, in harmony, you know, where the line has been drawn in the sand, and then what was it that was disconnected? And the disconnect was in the euro.
Absolutely.
You know, which is, you know, the bulk of the U.S. dollar index.
Right. And this morning, you know, so watch. I mean, how, and this is how markets operate. Period, folks. Meaning that, you know, people say, you know, whether it's the Fed or the European Union manipulating markets. Well, that's what markets have always done. If you're going to be in the markets, you better understand that. Okay?
Sure.
That's
It's
the way it goes.
it's your responsibility to go figure out where the clues are.
Yeah, exactly.
Right? That's all.
No, exactly. So sure enough, you know, basically 35 minutes ago, European folks, they're out there. They're out there this morning, man. Oh, they're out there big. No, I'm no kidding. That was the first acceleration up with the euro going back up and the dollar going back down.
Okay.
Was that news? It's the euro policymakers out there saying, "Hey, no, this is going to come together. What is your fund?"
Yeah, the EFSF, European Financial Instability Fund.
So, folks, listen to this. This is the fund that is not funded yet in Europe, okay?
Right.
So we had the politicians out here a half hour ago in Europe saying, hey, no, we're going to use that fund basically, you know, to prop up Greece.
Yeah.
Because what's going on is that now Greece is back on the table again.
Oh, yes,
you know,
absolutely.
So it's wild watching the whole thing shake out. That's the bottom line.
Yeah, you know, but as I kind of step back and take a look at things, you know, for me, the one thing, it was a couple of weeks ago, it was before Draghi came out with his comments. It was while you were on vacation, I believe. Okay?
Yes, okay.
And Timmy Geithner, you know, went on supposedly a you know, unexpected trip over to Europe,
right?
And sat down and was talking with Draghi. And I never saw any media, never saw any comments afterwards as to what all, you know, transpired there.
Right.
So to me, that's where, you know, I'm saying, okay, what really happened between those guys? What happened, you know, in those meetings? And when I take a look at the move so far in the euro, that's where I'm trying to put together that piece of the puzzle.
Right.
Where, okay, you know, are the central banks out there buying euros? You don't want to do it, I don't want to do it.
Right.
But is that, in essence, what the central banks and, you know, are doing out here?
That makes sense. Yeah. There's no doubt. You know, what happens, folks, is that the one of the roles of central banks, period, is to make sure things don't crash.
That's right. There's some type of stability within an unstable environment.
I mean, you know, depending on what your view is, my view is that, you know, we might not like what they do, but the reality is no one wants to see a crash.
Yeah, absolutely. That's chaos.
That's the reality, okay?
Yeah.
So you're going to always have this type of situation going on. What you want to wrap your head around, the larger picture, is that, okay, you know, what can these politicians do? My take is they can't do a thing, period.
Sure.
Because politicians are for themselves,
no, they're good at not doing a thing.
Yeah, totally.
They're great at it.
Yeah, listen, man.
Just yap, and don't solve any problems out there.
Oh, my God. Folks, don't grow up to be a politician, whatever you do. I tell you, I wonder how that happens.
Well,
I wonder how that happens.
Actually, I mean, there's so many great human beings on this planet. You know, our listeners,
right.
You know, yourself. There are folks that are ready to take action and solve problems. Okay?
Oh!
You know, and so now to the extent that you could get in there and it was just simply one-term deals.
Right.
You went in there and you were going to fix problems, you know. Then what a great world we would have.
No doubt. No doubt. And face the problems.
Boom, take them. You know, that's what a CEO of any turnaround company or even if you're not turning around.
Right.
You're in there and boom, you're solving problems and you know. That is where there's really...
you know what we got to do? If you saw this morning, folks, okay, you saw something that I thought was really neat. We got to get this guy on. So his name is Neil Bafsky, I believe. Okay. So what Neil was, folks, Neil was the Inspector General for the TOP program.
Okay.
Okay. Now, he just came out with a new book. And what the book is about is how the banks basically did not do, and the policy in the Treasury did not do what was supposed to be done with the funds, with the top money, right?
Yeah.
But picture this, okay? This is a guy that Paulson brought in. Okay, this is an insider.
Yeah.
Okay.
Yeah.
And it was absolutely amazing. So on CNBC this morning, right?
Okay.
They wanted to bury this guy.
Really?
Oh, you should have seen it. It was amazing.
Because he was... and he was the Inspector General of the fund.
Yeah, no, so check this out. The thing that was amazing, that I thought was amazing about it was this, folks. You get a picture of something. You know, Paulson is the guy that brought him in.
Yes.
Okay? And he was explaining that, hey, listen, the Treasury went to the Congress and went to the United States citizens and said, listen, this is what we need. This is what we're going to do with it.
That's right.
Okay, this is going to be money that's going to go into the banking system. That's going to go out.
That's right. Goes out to businesses, going to free up the credit.
And I think we'll be able to get this guy on because he just came out with a book. So what he was explaining in the book is that, hey, listen, number one, they did not do what they're supposed to do. That this money stayed in the banks.
Yeah.
Never went out to the banks. And though this was the kicker, and this is where they were trying to to me, this is where they were trying to bury him. That he was explaining that this cozy relationship between the Treasury and the banks is on a continual basis. And so every single time that he would say that, okay, listen, hold it, we need some restrictions in here, they would say, no, you can trust the banks. They're going to be all right. And he's explaining this, right? And you should have seen Leisman going at him. It was, it was hilarious. It was like, you got to be kidding me, man. And, and he was cool. He was turning around and said, you going to let me answer the question or not?
Oh, did he? Oh,
you should have seen it.
Beautiful.
It was some great dynamics, folks. Now, the question I want to ask the guy is this, and this is where this gets really cool. It's like, so when you get inside a bureaucracy, folks, most of the time, any type of bureaucracy, they've already done the work. They don't want someone that really...
Oh, no,
is going to be thinking, okay, or that's ethical. Yeah, when I was looking at this guy, he says, oh, they had a problem with this thing because this guy's really ethical. They thought that he's going to be right next to them, but the bottom line is that, and this is what he said on the air, which is just dynamite. He says, hey, listen, he says, before I get this, he says, my history is that I was a federal prosecutor for 8 years.
Oh, that's beautiful.
So what ended up happening, they thought they had a guy that was going to go along with everything, but the fact of the matter is they had a federal prosecutor who, bottom line, was probably...
Yeah, here's my mandate, and I want to fix the problem.
Just a clean guy,
that's right,
real ethical guy, not, doing his job in a huge way, okay?
Yeah.
And clean.
Yes.
It's like giving, what we're supposed to have as citizens. You get citizens, you get the feds, you get people protecting you. And when I looked at him, I was feeling so good. I says, you know what? That's the type of people that we need around us.
No, absolutely.
Because the guy's smart. He knows what his job was supposed to be, right?
Yeah.
And that type of bureaucracy, folks, those are the people I think that, many times growing up, I've seen plenty of those people. You see less of them now, but we need more of those people.
Oh, we do.
Then we really got a shot.
We do. And one term, no matter what it is that they're going to fix, that's it.
That's a beautiful thing.
That's it. Go do it. Go do your job.
Do your job. Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses, you stay right there, folks. I'm coming right back. The Dow's off 22, Nasdaq's off 5, S&P's are off 3. We're going to be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Right now, you get the Dow down 17, NASDAQ off 1, S&Ps are off 2, and Apple. Apple is up 1.5 out here. So Apple, folks, it's going to be wild watching how this little baby does shake out, because what you do have, until it gets under this 644, it doesn't say a thing, really. And, you know, we have now the Apple-Samsung deal.
Yeah.
Okay, so the trial's over. But now, supposedly the jurors have to go through something like 622 questions answering before they can come out with a. But that'll be the next thing, that catalyst-wise, as to what's flying here with Apple.
Yeah,
you know?
Yeah.
So we'll see where that baby does shake out. But I continue to like this volatility, and what I mean specifically, folks, is that it's not that we've had wide price spread, but we have had enough type of price spread, meaning running between 1404 and 1410 very quickly. And this is the type of move that you're going to see. You're going to see a move fast.
Yeah. Now, don't they release the FOMC minutes today?
Yeah, 2:15.
So 2:15 today.
2:15 today.
So they kind of figure the market will jostle around today.
Oh, yeah.
Up until about that time period.
Oh, yeah.
And then we'll see what we see, but.
Big time, no doubt. So sales of existing homes, folks, that just came out this morning, and they climbed in July from an 8-month low. Purchase of previously owned homes, let's see, increased 2.3% to 4.47 million on an annual basis. bottom line is that
and what's also really driving it, and many people know this, but it's really driving it, especially if you talk to realtors out there. What's really driving that, folks, is investors. It's investors that are swooping down and taking advantage of of this next great opportunity out there.
No doubt.
That's why we're starting to see. That's why you're seeing these numbers tick up everywhere.
Yep.
It's why all of the smart money. Whenever I see any of these folks that are, and there was another guy that was on at CNBC this morning. Now it was on the background. I just saw a blurb from Ron Barron,
yes,
okay.
I heard.
And he was talking about something about investing in homes in college towns.
Okay.
I don't remember, but again, you can just take one person after another, and that's what people are just simply buying weak hands out there, and that's why you're seeing those. So maybe you might say, hey, I got friends and family, and they're not out there buying homes. That's right. But what is happening? It's the investors that are swooping down, taking advantage of the opportunities out there.
No doubt. And if you do have an interest, folks, in real estate, in particularly in real estate in Florida, in Pinellas County and Hillsborough County, we have a Tiger Fund, and we have two separate funds. One's a $15,000 minimum investment. The other's $100,000. We're actually we get a beautiful website that's going to be up by tonight.
Oh, beautiful. Okay, good. Now, you're going to be in Sarasota tomorrow?
Yeah. So, actually, I'm going to be in Sarasota and Longboat Key tomorrow night doing a presentation. I'm going to be in Boston next Thursday night.
Okay.
And if you have an interest in basically in real estate, in buying real estate, 50 cents on the dollar, bottom line, give us an email at tigerfund@tfnn.com, and we'd be more than happy to get you that information.
Good.
But
that's nice. That's a nice area. Sarasota, Longboat Key.
It is beautiful.
Oh, man, that's a nice strip of property.
It is beautiful.
A Longboat Key strip of property.
Right. And depending where you are in the country, folks, we live on basically barrier islands. That's what these are down here.
Yeah. Yes.
And it's wild. It's really wild is looking at it from the Google Maps.
Oh, okay. Oh, yeah.
Because when you look at it from the satellites, it's like, man, this is crazy. You know what I mean? Because it really is, folks.
Yeah.
I mean, it's like, it's beautiful, but it's like, wow, just little pieces of dirt that
it is. And now there's a storm out there that may be coming our way. So
and hopefully it won't. But it looks like right now we're going to get remnants of it anyway.
Yeah,
it looks like it's going to be 30, 40 miles an hour, which in between we get the Republican convention. So what has happened, which is just amazing. I mean, you've seen it. So watch what happens, folks. Is that I can see why any city wants a convention.
Oh, yeah. Your dollars at work.
The folks, for all you folks across the country, thank you very much. Because your dollars that you checked off that presidential election or whatever, in between that, let me tell you something. They've put some huge amounts of money into
permanent improvements that are here forever at no cost to the city.
Right, and it's gorgeous.
No cost to the residents, taxpayers, local, anything.
Right. So watch, folks. When you come into now, without Tampa Airport is absolutely beautiful. If you haven't been to it, it's one of the best airports in the country anyway. Things come in fast. But now when you come in downstairs, it's like Las Vegas. Downstairs, folks, they have LCDs that are about 35 feet long by 10 feet. The whole thing. Okay, we'll talk about the rest of it because when you come out, it's amazing what they did. I mean, big, millions of dollars, all the way right down from right outside us, right Clearwater Beach.
I love it.
Steve Rhodes, Tom O'Brien, all you Tigers and Tigers, so you stay right there, folks. We're coming right back.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We get the Dow right now up 24. NASDAQ is up 1. S&Ps are down 2. And gold is flat out there. Some of the high-volume stocks in a low-volume market. Look at that. Sunrise seems to be getting taken over, up $5.
Yeah. It's up a nice, what is it, about 20% or so. 60,
33%,
60,
yeah,
59%.
Yeah,
what am I talking about? That's a good morning when you wake up and you're up 59%.
So let's go look at that chart for a second. I want to see that chart. It's always like this, who knew what? Oh, there you go. Who knew what? Well, they knew what on...
SRZ.
Oh, my God. I'll tell you. August 3rd. There she is. Unbelievable. Oh, man, I'm telling you. Where's the SEC when you need them? Pretty amazing, no doubt. So let's take a look. So what other stocks we have out here? You get BAC, Bank of America, up 11 cents. Dell's down 84. Yeah, Dell's in tough shape, man.
They really are. You take a look at that stock chart, and, you always talk about, the market gives you several opportunities to get out.
Right.
And Dell certainly has done that. It has gapped down several times, giving folks an opportunity to get out. And now Dell wants to go all the way back to its lows in 2009. The February lows.
Look at it. Just you get an ABC down. Oh my God! I mean, this is intense. You're blowing by the 1143. You actually hit the 1143, but guess what? You hit it with 24 million, and it's what, all of 10:30 Eastern time.
Yeah.
And that was that's the swing point. With 23 million, we've already done more.
Exactly.
So if we do it conservatively, so if I take it from the gap, which is 1475, it's still $4. Let's get to $8.50.
Great. And at 784 to 908 is the February 20th, 2009 swing point.
That's where it's going.
You know, it's like, how does that work?
I know.
Right? Which is great.
No, big time.
And then they don't have a ton of volume down. Well, they've got pretty good volume. They've got 176 million shares down.
Oh yeah, and listen, that can blow that out, man.
Yeah.
You know, the thing is there's no doubt. The thing that's amazing is that, you know, and I can understand it. You know, Michael Dell. Huge acceleration up, change the business, change the model, hit it. And then, you know, what does happen in large companies, you build the infrastructure and then, you know, you got to keep going. I mean, so because there's a dynamic shift now, right? I mean.
Well, so I came from that. I came from that industry, you know, and so when the industry started out, you know, it really started out as a personal computer industry.
Right.
You know, and Apple was really the first big name in there.
Yes.
Now, this is back in the early 80s. And I opened up the largest retail computer store certainly in the Southeast. It was in the country. In fact, CompUSA ended up being modeled after that store. It was a 13,000 square foot store. Back in 1983, nobody had ever done something like that.
That's right.
And we had it was built as a retail store.
Okay.
That's what we were going after, was the retail space.
Right.
Within the first 6 months of business, we learned that, we needed to change the business plan.
Yeah. Right.
We had the retail storefront, but that was there really as our anchor showpiece to be able to go out and get all of the corporate business, to show the strength and staying power versus all the other small Computerland stores, because they were all 2,000, 1,000 square foot footprints out there.
Yeah.
So the computer industry back then was all Apple, IBM, and Compaq.
Right.
You know, Compaq made off of the business
Commodore,
plan off.
right?
But they
small,
and that was a business that started off of a napkin. Okay, in a meeting, a couple of guys they built a huge. Now they're gone. They're gone, and now, they did. They
who bought Compaq? Was it IBM?
I think it might have been Apple, or not Apple. I mean Hewlett Packard. I think they had bought them.
Okay.
But so back in those days, so from #83 to about '88, '89, you know, it was just simply battles between Apple, IBM, and Compaq. And then what started happening, especially as we grew our business, you know, we were doing $100 million a year. That business was primarily. And even though we had 18 retail stores across the state of Florida, now the business still was primarily corporate.
Yes.
You know, 80% of the business was still corporate.
Right.
But those margins, when we started out, folks, then we were at 40% margins. And when you're selling something, you got a 40% margin, you can afford to make mistakes. Corporate America, we were down to 8 to 11%. You can't make mistakes. Almost you can't make money.
At the beginning,
it was 40.
And folks,
8 years later,
just so you understand something, they were at 40% margins, selling 286 IBMs at 5,500.
That was the other thing.
I bought 8 of them.
Absolutely.
I remember I bought 8.
Yeah, exactly.
And it was a business. That was in 1983.
That's right.
1984.
So your price point of a product was high, your margins were high,
right?
And then what happened was prices went down, margins went down, an absolute formula for disaster. We went from being really a computer retailer to being a bank. Because it was really all about
financing.
Because when you're doing $100 million a year in business, you're doing on average $10 million a month.
Okay.
And if you don't manage those receivables and that inventory, you're going to be shutting the doors really quick. So we became a financing, in essence, entity versus really a computer retail business. But what happened was there was a transition from the top name products to all of these what were called clones back then.
Yes.
And then you had people, you had clones coming from different parts of Asia.
Right.
And what Michael Dell did was the smartest thing, because then it was really Dell and it was Gateway were the two kind of American brands, in essence, that were out there. And, so he was able to change the business model back then.
Okay.
But boy, he has really missed the boat this time around.
Yeah.
As everything has gone to small devices, pads, and so forth. And I don't know how I don't know how he makes that. He makes that change by moving into more of a service business, I suppose.
Well, that's where that you can have. I mean, when I look at that, I say, okay, 90. So you get 90, you get 2,000. He's in it 23 years now. that's when...
No, just to understand, the whole focus behind, back then, the computer retail business, and Steve Jobs, okay?
Right.
And Steve Jobs absolutely went after John Sculley. It took him 3 years to get John Sculley. And the reason is, folks, is because what he understood back then, or at least all of us were trying to do, was to create this personal computer industry, this personal computer business. The vision was, and I went to all kinds of meetings, and what our mantra, our belief was, that there was going to be a computer in every room of a house. This is back in 1983.
So it took 20, 30 years. But it was an idea way ahead of its time, okay? And one of the reasons that Jobs went after Sculley was because the idea was to create a commodity product. That's what it has become right now. So that was the vision. It just took a lot longer to get there, and he thought, who better to go after than the guy that was, the head of Pepsi. Okay, that was out there from a branding standpoint. And then, and for me, the biggest flaw from Jobs' standpoint was the fact that he was thinking he was going to bring in a new CEO, and somehow they were going to be co-CEOs, and it doesn't work that way. Not especially in a public company. It's either and then there was a problem, with the idea being, too far ahead of its time, and that whole thing was just destined for failure. It was one of Sculley's worst days of his life, actually, when Jobs ended up, leaving, getting fired for the board. Oh, sure, right.
He just sat there and he cried all day long.
Right.
I don't know if it's in a book, but I had enough meetings with him to.
Yeah, there's no doubt.
That was a tough day for him.
There's no doubt because Jobs brought him on.
Yeah.
Then he had to fire him.
Yeah.
So much for boards, right?
Yeah.
But then when you have is look at what he did after it. And so you can see that the idea was right, but it was 30 years prior to it.
Oh,
now it's like there. Right.
Yeah,
but now it's there on the cell phones. That's what That's what's really interesting.
But that's the whole point, really, to folks out there, because at the time, and for many years after that, people would think, it turned out to be a bad situation. Your story's never over, folks, until they're throwing dirt in your face.
Yeah. Exactly.
So don't give up on your dreams or change your dreams out there.
No, totally.
Totally. I mean, his dream turned out to be better. If that hadn't happened, okay, happened, because he was so focused on creating that vision, it wouldn't have been around.
Right.
And Apple probably wouldn't have been around.
Right.
Okay, because it needed him to step back and then come in and say, okay, now given all the information that I have, here's what we're going to create, a media company.
Yes. Yes.
Okay, not a computer company.
Right.
But we're going to give products to people that they don't even know that they want, and we're going to create, a media-driven business out there.
It's amazing, isn't it? It really is amazing.
And that's why it's valued at what it's valued at. It's not because it's a computer cell phone company.
No, there's no doubt. There's no doubt. There's no doubt about that.
Yeah.
And that's, media is 24 hours a day, entertainment's 24 hours a day, and you see it. You see it with all those iPads, you see it with the phones running around. I mean, one of the main reasons, even when I ask my children sometimes, that, it's like, well, you're going to change phones. They're not going to change phones because all their music is on their phones.
Yeah, and the hassles of it and just everything else. You're like,
it's
huge.
It's huge. There's no doubt about it.
Yeah, absolutely.
You gotta love it, man. And now I guess the key's gonna be, so you get Hewlett Packard, they're done. You get Dell, that's done. You get Best Buy's done.
Yeah, exactly.
You
just watch business models just totally shift and change. That's why you got to really stand your game.
Right. And it's like, okay, what's going to be the next one? Oh, hey, you know what? So check this out. Let's go to Facebook for a second. I want to show you something with Facebook, folks, because I want to show you, and I got to. Well, we'll see whether I get enough time to do the work on this. But I know what the work is, but not to present it in a I'm going to present it to you right now, fast, down, and dirty.
Yeah, okay, but that's cool.
It's the same deal.
Yeah.
Okay, so on Facebook, whether it was the New York... Well, actually, the Wall Street Journal reported it correctly. Okay. So what ended up happening yesterday, folks, in the media, is that the media kept bringing up that Peter Thiel sold his shares, 20 million shares, but out of those 20 million shares, there was a prearranged sale. Okay. Now, what happened is that they got this off the Wall Street Journal. Okay. Now, what they did, this is what's just amazing in general, and this is why third parties, folks, I can't stand third parties thinking. Like, if someone even talks to me on a social basis and they say so and so said,
no, I know.
I say to them,
spend a few minutes, go do the work.
I said, don't talk to me about third parties. I tell people I can't stand it.
Yeah, just go do the work.
I just can't. So anyway, yesterday I'm hearing this as soon as I woke up. I says, hold it. I knew that part was wrong.
Yeah.
Because when we were live on the air, we had already pulled it up.
Yes,
I had pulled up that that he was taking B shares, which is voting shares, into A shares.
Yeah.
And I already saw 9 million
So he might
shares.
have had it prearranged for some portion.
Listen to this. Listen what the bottom line is. You're going to crack up. So what ended up happening, I knew that. So last night I had a little bit of time, so I ran it last night. I looked at it. So then I went back. I says, okay, where are they getting this? So they're getting out of the Wall Street Journal. So check this out. You talk about people not doing their work.
Yeah.
Out of the 20 million shares, yes, it was prearranged for 2.1 million.
I could
Give me a break.
Certainly,
okay?
I could picture that.
So instead of reporting what should have been reported,
for sure,
it's a mind blower.
Yeah.
The bottom line, folks, is that he's taking everyone to the cleaners, but that's his job. That's what you got to understand.
Look, he came in that as an early investor for that day.
Totally.
2 days ago. Now, he was hoping that it was going to be cashed out at $40. That's right.
Yeah, no doubt.
Okay.
No doubt.
So 20 million shares at about $20. What'd that turn out to be?
It's a
400. I don't.
No, he made $1 billion.
A billion.
Now the thing that's amazing. So check this out. When they sold PayPal, he only sold PayPal for $1.5 billion. And he had to split that up.
Yeah.
He made more on this deal than he made even when he sold PayPal.
Yeah.
And there's nothing.
And he still left $100 million in the bank.
The bottom line, folks, there's nothing wrong with what he did. What I want you to understand more than anything is this: that's what Wall Street's about.
Absolutely.
Okay. So when you understand that concept, what I don't want you to do is to walk into it and say, "Oh, they're giving me the right." They're giving me the right to what? To put your money up? You know. And it's a great deal. Good. It's a good deal.
And really, I think the only place where it was being reported, as all the hype was going on inside, the Facebook IPO, it was really just here where David and yourself were talking about, hey, let's just go take a look at all these lockup shares and when these things are going to be hitting the marketplace.
Right.
And nobody was talking about that in the early stages.
Right. And it's going to be
just here. I mean, just
I'm with it. There's no doubt. There's no doubt. Yeah. Cooking, man, pushing paper. They were pushing paper big time. Yeah. And the social media deal, there's no doubt that's going to be as close as the NASDAQ top.
As far as the bubble, of social,
that's my take on
it. Look, I've been saying, look, there before Facebook, there was what was the other name of the one that was out there, and it's gone. And the same mistake was made. The guys paid, who bought it for $500 million. What was MySpace?
MySpace.
Okay, it was bought by one of the media companies for $500 million, and I think they sold it recently for,
Listen, I've told the story before. It gets even better than that, folks, okay? And I know the guys, I've talked to them a couple times. One of the guys that thought he was going to take me to the cleaners, it didn't happen, but I almost lost a huge amount of money. Yeah. And it was the Globe.com.
Okay.
So watch what happened, folks. The Globe.com started at Harvard Business School. I know these guys, okay? Because one of them was a neighbor of mine, okay?
Yeah.
If you go back that far, now I think actually that something that wasn't even that movie. I think that Zuckerberg probably got the idea of the Globe.com. The Globe.com, same type of structure, right? Bottom line, to make a long story short, Globe.com. That was one of the first. They were millionaires immediately.
Yes. Bottom
line, I get one of the investors comes down to my house one night, right? And bottom line, they wanted to sell this stock. I said, okay, and we'll move the whole deal out for you. Bottom line is that these kids, they're all Harvard guys too, reneged on the deal.
Yes.
Okay.
Yes.
So, good old Tom O'Brien. I'm stuck in the middle here, right? I'm looking. I'm on the hook for millions of dollars.
I remember that deal.
Bottom line, folks, is that I traded my way out of it, and they lost millions of dollars. And they lost everything.
Yeah.
Yeah. Thank you, God.
Yeah.
But let me tell you, it was a close call. It was a close call that I was going to go down south for another $400,000 or $500,000, which would have been a drag. But that Globe.com side.
No question, folks.
Greed will kill you.
Know your outcome and what business you're in.
Hey.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow down 46. Nasdaq's off 6. S&Ps are off 5.5. And bottom line is that bonds are screaming that it wants lower S&P, but the bonds up 22. We still don't have this dollar. I mean, it's up 6 ticks. As I said earlier, I'd like to see.
Just imagine if the dollar did move. So if the euro started to fail and the dollar did move,
forget it.
You know, and the FTSE's down 1.5%. It's down 85 points.
Yeah. Well, I suspect what you just have, folks, in the last 10 minutes. I suspect that one of the Fed officials whispered in someone's ear about what is going to be in these minutes this afternoon, because the bottom line is that someone just threw a huge amount of contracts in the S&P.
Yeah. Yeah.
Something leaked. Look at that, Angie knew it. Something leaked. So the boat is leaking somewhere, folks. Well, at the bottom, I don't think there's going to be anything that's different.
That we don't already know.
Yeah, because they've been. This is how.
Look, we're way above the market is way above the Lehman crisis. Okay, because that really was what catapulted Well, it started coming down. But then all of a sudden you had the Lehman crisis, and all the bankers were moving into full swing here. Okay, what are we going to do? And the market is way above that 2008 level.
Huge.
And not that they can't come out with another QE, but got to be some reason.
Well, this is what blows my mind. Well, and this is, when you talk about whether, what cracks me up is that you have people complain about bureaucracies and federal policy, right?
No, I did. Yeah,
but then on the other side of their mouth,
I think I know.
That's
exactly.
all they want to hear.
Yeah, that's right. If you're
is
in the market,
free money.
That's right.
And all they want to hear on the other side, come on, you got to do something. And it's like, okay, there's something ethically wrong with that. There's like, okay, so tell me that thinking again, okay? Because that's all about, no, you got to do this. No, so we'll see where it shakes out. I mean, that whole structure is intriguing, though. You know what I mean?
Yeah.
It's wild, no doubt.
I love it. Hey, you tell you a stock that is. You like chocolate soufflés?
I love chocolate.
Well, Williams and Sonoma. Go check out I was telling when I had stores over in Asia, and whenever I would travel over to Japan, I would stop in Hawaii. That's how I really fell in love with the islands there. Now it's the flights would go basically from Florida to Honolulu, and I would stop there and I would go to a Roy's. And get one of the chocolate soufflés.
Roy's is only in Honolulu.
Yeah, that's right.
Now you can get them in the United States.
That's right. But Williams and Sonoma, I was talking about this in my show. They make the same. You can buy it in this tub.
Can you?
You just scoop it, and you scooped up the chocolate thing, put it in your soufflé dish. 20 minutes later.
Are you kidding?
Oh, and it is just as good. No, it's dangerous. That's what. No, but.
Oh, you know
it's dangerously good.
I'm gonna get some for us. We'll have them at lunchtime.
Yeah,
not today. I'll get them tomorrow. I'm totally kidding. I'm not kidding.
I tell you, but this stock here, man. I mean, it's up nicely today.
Yeah.
On volume, and this thing has got a confirmed A, B, C, D. That's going to take it all the way to its highs.
Look at that.
Going back even further.
Monster.
Yeah.
I love Williams Sonoma anyway.
Yeah.
I mean,
they're doing something right.
Well, I love cooking, so I love going in there, seeing all those machines.
Yeah,
you know what I mean?
Absolutely.
There's nothing like good machines. Well, you know what's funny about Roy's now, too, when you think about it? Roy's is owned by the guys in Tampa,
Yeah.
I mean, so you go all the way from Hawaii, and what we have in the Tampa area, folks, is pretty amazing. There's a huge amount of food entrepreneurs, that own huge amounts of restaurants, and they do all these different concepts.
Yeah.
And they buy the concept, and then,
Hooters started just down the street here, folks. In fact, the landlord that first gave Hooters their first lease passed away this past week.
Oh, bummer.
Yeah.
Oh.
For whatever that's worth.
Yeah, no, big time. Steve Rhodes, Tom O'Brien, all you Tigers and Tigresses. Are we done?
We're
oh, my
done.
God. I can't believe that. Time flies. Stay right there. Basil coming up next, folks.
Take care, folks.